All right, crude oil. The system called the high, the exact high now on crude oil this morning on my number one. All right, let's go over the black charts, why we have them up and why we have the J signal charts, which called the high here on the number three again. All right, first of all, the black charts are totally separate than J signal. We have it for room members to view. We don't look at the control point, we look at the high value and low value areas. The high value are in red on both charts, down here in the bottom left in red, and the big long chart in green would be the low value area. So high value is red, low value is green. The rule of thumb, what you want to do when you log into Omnivia to view the room, on the bottom right under documents, go to the bottom right under documents and print the two one-page PDFs out. That's one-page PDF to help you out. And those one-page PDFs show you exactly how to trade that number one, how to call this exact high to get into the exact bar, and how to get an exact bar in this number three setup here also. So let's go over the black chart trade that called the exact high that you traders got in this morning, you members, and you members who got this number three. The number one, first of all right, we could see we were at 5093 was the HVA high value area where my cursor's at up here. What we do is we look at the overall trend when we first log in on the black charts. Totally separate. The black charts, there's two setups to learn, and there's one setup to learn on the J signal charts on your own Ninja charts. We have a total of two total setups. We have a number one and number three on the black charts, and we just have a number three on the J signal charts. So if you trade the J signal all by itself, you have one setup to learn all year long in 2015. That's all you have to learn is one setup. One. If you want to trade the black charts, you have two setups to learn. The difference between a number one and a number three, a number one, I'm trying to catch the exact retracement high or the exact retracement low on a pullback with overall trend direction. Moving averages are hard down. My magenta moving average is hard down. Sell the first test. You're allowed to sell the first test of high value. When it comes within two, maximum three ticks of this 93, it came within two or three ticks of it. You use your Renko bar, and you wait for a doji or spinning top to form on the black charts. A spinning top will be in blue on the Renko bars, and a doji will be a plus sign. Once it closes below the low of that doji or spinning top that automatically forms, you get in with the close below, the body of the candle close below, right there's your exact bar entry. That's how we do number one trades. I use a 13 tick hard stop on all my number one trades and my number three trades on the black charts. I don't use more than a 13 tick stop on it. You don't need more than a 13 tick stop. Either it's going to catch that exact high. We had a huge trade, 85 all the way down to 15. $600 trade potential per one contract, just like that. All right, by using a maximum $130 loss, I wouldn't use more than $150 loss, 15 tick on any black chart trade at all. I use personally 13. You can use 15 if you want, maximum 150, but don't do more than that. All right, so number ones, we're trying to catch the swing high or swing low on a retracement. Number threes are different. Number threes on J signal in the black charts, we're looking for a break inside or outside of market profile. On your own Ninja charts, I got this profile right here that comes up on your own Ninja charts. There's your red, which is high value. Low value is green. When you break back inside of HVA and the 5-minute trend is up, that's called a corrective wave. There's only two wave patterns. Yesterday I did a big video. Go to daytradingthefutures.com. Click methodology, click video. I got a real good 15-minute video on corrective and motive waves. There's only two wave patterns. There's only one setup to learn on J signal on your own Ninja charts with two wave patterns. There's a motive wave with 5-minute trend and a corrective wave against 5-minute trend. 5-minute trend was up, so if we break back inside of HVA, you're not allowed to counter trend trade in this room at all. None, unless you break back inside a high value, which we did. The market weekend, and you take the first J signal short. Right here's your first J signal short with the red fib dots, arrow, there's your triangle. That's called a corrective wave short. So the difference you can see in number one, I'm trying to catch the exact swing, retracement high or low, like we did yesterday and the day before, nailed it again. And then a number 3 is what's called a continuation. So a number 3 pattern, I'm trying to sell the lower high or buy the higher low. Where number 1, I'm trying to catch the swing high or swing low. Okay? The market will only do one or two things all day long, every single day. It's going to be either number 1, number 3, number 1, number 3, number 1, number 3 off market profile. That's all we trade all day long, to make it simple for you. Number 1's off the black charts, number 3's off the J signal and the black charts. Very, very simple methodology. You don't have to reinvent the wheel. You trade one setup. It's worked for 30 years. The setup's worked for 30 years on market profile. Still works every single day in the room. You break inside of HVA. You take the first retracement short on a corrective wave. Now look at our stop level. Once you get in at the triangle, you don't need more than a 15-tick stop on the 3 Simrenko. Do not do more than a 15-tick stop on the Simrenko. So that put your stop at 75. Let's say you get filled at 60. The worst case scenario at 60. That puts your stop at 75. Your stop wasn't even close on this trade. And you still went all the way down and made another $450 trade per one contract potential on J signal. So you had a $600 trade potential on the number 1 and a $450 trade potential on the number 3. All right? All with limited risk. The reason this system works so good is we have limited risk. I don't do more than a 13 to 15 tick stop, maximum 15 tick stop on the black charts on number 1, number 3s. I don't do more than a 15 tick stop on my number 3s. Okay, on J signal, on the 3 Simrenko, at all. All right, if you use the 5 Sim, I'll use a 20, but then I'll adjust my stop right away after it starts moving on my first target, because it's a longer term time frame if you use that. All right, the stop is this though, the black line that goes across. The black line goes across. If you have a 15 tick stop on this trade, okay, after you enter on the triangle, if you enter on the triangle, this black line right here, the upper black line, the wicks don't count. If it closes, a body candle close above that black line, then you get out. You close your position manually. I don't care if you're down 12 ticks, 11 ticks, 10 ticks, 8 ticks. If you close 2/3 body candle where wicks don't count, you get out. But if it wicks you like this, don't be concerned if the wicks go above the black line. My hard stop's in just above it at 75. You don't have to be concerned about wicks. Wicks don't matter. Wicks are for novice traders. Whoever trades wicks don't know what they're doing. We don't look at wicks. It's got to be the body of the candle. Wicks is for professional traders to take out the novice trader. We know that. You're educated better than that. You know that. So if it wicks you, you're fine. If it closes above 2/3 body candle, you take a loss. No, I would not take it here because you had 2 shots at it, Tom. You had 2 shots at it. It's going into a number 3. Moving averages are crossed up, so it's a very low probability number 3 off the black charts. Yeah, it's a non-issue because of the trend change, you mean? Yeah, I wouldn't be selling these markets if we're down already. Here's a key, guys and gals. We are typically done by 9 a.m. in the morning, right? 9:30. I want you in here at 7:30 to 7:45 Eastern Standard Time, and you should be done in the first hour to hour and a half of trading on the majority of your ticks with this system. We're not stock traders. We're futures traders. Oil and crude should give us enough opportunity on a number 1 or number 3 with J signal before 9:30 in the morning. We're done already. It's 8:56. And my target, I said you can bail all here at the last set of symmetry dots. $600 potential per one contract on the number 1, $450 potential on the number 3. We're done again. Yesterday, done by 9 o'clock. Day before that, done by 9 o'clock. You got to get on, everybody. It's very important you get on these signals early. You don't need to trade this all day long. You get in, you get your work done early. And that's what I'm trying to impress upon you. A lot of this movement happens before 9 o'clock or 9:30 in the morning. Okay? So, really, really good way for you to take advantage of that, guys and gals. Gerald, good, and shut that off. So remember, there's a number 1 and number 3. There's only 2 setups on the black charts, a number 1, number 3. And there's only 1 setup on the J signal chart, a number 3, which is called a motive or corrective wave. And we're going to do that all year this year. Okay?